Thank you for watching this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we will be doing technical analysis on the S&P 500 and the triple Qs for Wednesday, November 11th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today is Veterans Day here in the United States, so the first thing I want to do is thank all of the past and current service members of the United States Armed Forces. Thank you so much for what you do and have done for this great country of ours. We couldn't enjoy our freedoms and what we have here in the U.S. without you, so thank you so very much. The S&P 500 was up 77 basis points today, and we closed at 3572.66. The first chart that we're going to look at is a 5-day, 5-minute chart of the S&P 500. And you can see here on Monday, let's just kind of recap the last few days. You can see here on Monday, we had that big gap up on the open. And this line here, this blue line, is set at 3,600. Now, I boxed this off because I want you to realize that this is the only time right here on Monday. That's the only time in the history of the S&P 500 where we have had trading above 3,600. Now, of course, we sold off at the end of the day and didn't close above 3,600, but we at least tested that area and traded above it for the majority of Monday. Of course, yesterday we sold off early into the morning and then closed a little higher. And you can see here for today, we gapped up at the open and pretty much just traded sideways for the balance of the day. So most of the day's gains, this 77 basis points of gain that we got here on the S&P 500 for today, happened at the open of trading today on Wednesday, November 11th. The next chart that we're going to look at is a one-day, one-year candlestick chart of the S&P 500. So each candlestick represents 1 day of trading on this chart. First thing I want to point out is that today was the second highest daily close in the S&P 500 ever. So today we closed at 3572.66. On the 2nd of September, we had our highest daily close ever at 3580.84. So we came very, very close today, within really, a little over 8 points. So 3580.84 to 3572.66. So about 8 points and change. So we're getting close to making a new all-time high once again on the S&P 500. But we'll have to see. I'm going to show you in the next chart here where we might be pulling back here. We'll just have to wait and see. But it's possible that we might be heading for a little bit of a pullback here, and we're going to talk about that. Now, if the market does pull back, the major support areas below where we are currently trading are 34.20, 33.30, and 32.10. So kind of keep those in mind. There's a decent amount of support here, not a ton, but a decent amount of support at 34.20 that goes back to really the last week or so of August of this year. So, it's not a super strong support area, but if the market does pull back anytime soon, that would be the most logical place, at least the first area that we might stop if indeed we are going to roll over here anytime soon. And we'll talk a little bit more about that in the next chart. The next chart that we're going to look at is an hourly candlestick chart of the S&P 500 that goes back to the 1st of August. And again, we can see the support areas that we just talked about, the 34.20, 33.30, and 32.10 areas. I have also added this blue line here at 3,500. There's a little bit of support here. You can see we traded right up to this 3,500 area back at the tail end of August and then got above it for a few days. Of course, made that all-time closing high here on the 2nd of September. Sold off, hit our most recent high on October 12th and had this pullback. And then we had this really rapid ascent, and so I've drawn this trend line underneath that really rapid ascent. And we know, of course, that on Monday we rolled over here, and that's what we're seeing here is this rollover. And we have now, for the last couple of days, closed beneath this uptrend line that started really right at the 1st of November. So the question becomes, are we just stalling out here, or is this the start of a real rollover that will take us down to at least 3,500? I mean, we might stop there, but guys, you can see there's just not a lot of support there. But on the hourly charts, it's a little easier here to see some of these shorter term support areas. So that's why I wanted you to see this on the hourlies. The 3420 area goes back to, like I said, really the last week or so of August. That started here on the 24th, where that's the first time we ever got above 3420 on the S&P 500. And you can see here that we've had some support here, and it trading right up to it for several weeks here in September and October. And this 3420 area for the last couple of months has acted as a support and resistance area. When we drop down to the 3330 area, we can see that there's a lot more support there, and we can really see that on the daily charts. This 3330 area has been in play really since back in January of this year. And 3210, if 3330 does not hold, then 3210 is the next area of support. And we came right down and kissed that 3210 line on September 24th when we made the bottom that shot us up to this this most recent peak before we had the sell-off. And, of course, we've now got it back above that. But just wanted to kind of give you some context around where some of these support and resistance areas are going to kick in and why. But, right now we're trading below this uptrend line, but this was a very, very steep ascent. So, as long as we stay above 3,500 or even 3,420, there's just not a lot to worry about here. But let's not be surprised if we do pull back to this 3,420 area, because that would be a fairly normal pullback based on this very rapid ascent that we have had over the last few weeks. The next chart that we're going to look at is a 1 day, 1 year candlestick chart of the triple Qs. And first off, the triple Qs up 2.27% today after having a couple of negative days in a row there. So we're back on track, at least in the short term, on the triple Qs, up 2.27% for the day. And just like the S&P 500, the triple Qs, the NASDAQ 100, the highest daily close so far was on 9/2, where the triple Qs closed at 302.32. This blue line here, I put this in here because I wanted you to see that this was also the only time in the history of the NASDAQ 100 where we have closed above 300. So kind of interesting there that our all-time closing high and the only time that we've traded above 300 or closed above 300 was right there on 9/2. And we've been getting a little bit of a consolidation here in the triple Qs since the 1st of September. So the question becomes, can we continue to consolidate and then break out to the upside, or is there further downside on the triple Qs? And guys, there's no way for any of us to know. We can speculate, but there's no way for any of us to know for sure. But I also want to point out that we're still trading a long way above the 200-day moving average on the triple Qs. That's its blue line right here. So if we pull back to the, or at least towards the 200-day moving average, that would be a pretty significant pullback on the NASDAQ 100, the triple Qs at this time. So we'll have to keep our eye on that. We're not too far off of the all-time closing high, but again, you can see that we've had several months now where we have been consolidating and trading below those all-time closing highs. But today was a very nice day in the triple Qs, up 2.27%. So we'll take that. And, and we're also, very nicely trading above the 50-day moving average, the green line here. However, you can see that the 50-day moving average is starting to roll over and turn down. So that's not generally a positive sign. So there's a couple of things that we do want to watch on the triple Qs here. As long as we stay above the 50-day moving average, of course, not much to worry about there. But if we start to trade below the 50, then we might go down to this 200 or at least close to the 200-day moving average. So, and if that happens, I think it's going to be pretty difficult for this entire market to continue to go up, because the NASDAQ 100, the large cap tech area of the U.S. stock market, has been by far the strongest area of the stock market in 2020 and really for the last few years. So without tech leadership, it will be very difficult for the overall market to continue to advance.